good business news. South Africa's factory activity is showing signs of improvement, with the Absa Purchasing Managers Index rising to 48.7 index points in January 2026. Although still below the 50-point mark, which indicates a fourth consecutive month of contraction, the pace of decline is easing. Business activity rebounded, with the sub-index rising above 50 to 51.4 points, driven by domestic demand. Export conditions, on the other hand, deteriorated sharply, falling to their lowest levels since the COVID-19 pandemic. Absa CIB economist Sello Sekele speaks to us further now about the latest PMI reading. Thank you so much for your time, Sello. The overall reading, what state of the manufacturing sector does it paint?
Yeah, thanks for having me. So, when you look at how we ended December, it was quite discouraging, right? Then you look at the January print, it's quite encouraging, but it's not really that good. So why am I saying this? Yes, the PMI increased in a fairly broad-based manner. So all of the sub-indices that make up the PMI increased, but the PMI remains below the 50 neutral mark. So what it says is that businesses, are seeing improving business conditions, but they are not yet expanding.
Not yet expanding. It brings me to ask about the near-term outlook then, seeing as we are only in the first month of 2026 and already there are projections of improved economic activity throughout the new year.
Yeah, so one of those houses that are looking at robust economic growth, I mean, the forecast as things stand is quite above consensus. So we think that GDP growth coming in at 1.9 this year, after coming in at 1.4 last year. One of the reasons we are so optimistic about growth is these strong export commodity prices. We think that those will boost exports, and the income from those export commodity prices will also filter through the economy and also benefit household consumption. And what we're seeing as well is that credit to firms has been increasing quite rapidly, and we think that that sort of increase in credit will come through in terms of investment, especially in an environment where you see business confidence improving, and at the same time you see a lot of imports of machinery that we last saw when people are trying to mitigate the effects of load shedding. So as things stand, the story for SA growth is quite optimistic for this year.
Optimistic for this year. What's to be said about what could then tip the scale in terms of that forecast, particularly when we look at geopolitics and the global economy?
Yeah, so look at first. So as things stand, the global economy is holding up quite well. We have an assumption of global growth of 3.3%, which is the same growth rate that we saw in 2025. I mean, that's an upward revision from the 3% that we thought we'll see for this year. And the main reason is, the upward revision in economic activity in the US and other parts of Europe. But in terms of what could go wrong, look, geopolitical risks remain, right, that are unlikely to go anywhere anytime soon. And on top of that, the strong investment in AI could correct and therefore weigh on economic activity. So those are some of the downside risks to our global growth assumption. When you come closer to home, look, if the reform momentum stalls a bit, and then that weighs on business confidence, that could be one channel where we see growth disappointing. If, for example, Transnet is not improving as much as miners would like it to, so that they can take advantage of these high export commodity prices. I mean, that can bode ill for economic growth this year. If rate cuts don't fall by as much as we anticipate, so we think that interest rates will fall by a cumulative 50 basis points this year. But if rates don't fall by that much and we see inflation actually coming in higher than the 3.2 that we think for this year, those are some of the factors that can lead to growth surprising on the downside.
Thank you, as always, for your input. Absa CIB economist Sello Sekele speaking to us about the latest PMI reading, an improved one, but we are not out of the woods just yet.